Hey guys, thanks for watching. Welcome back to Smart Money Minds. For those who don't know me, my name is Ben, and today we're going to be talking about why the stock market charts never just go straight up. You look at something like Amazon, which is an amazing company, you look at Google, and you look and it doesn't go straight up. It goes up, it dips, it goes up, it dips. Why does that happen? In today's episode, that's exactly what we're going to be talking about. So the reason this happens is because it boils down to the basic fundamentals of supply and demand. Do you have a favorite sports team, a favorite soccer team, or a hockey team? When you watch their games, do they ever win 8-0 or 12-0 or 20-0? Does that happen very often? Last time I checked, that doesn't happen. And if it does happen for your sports team, great. But I'm pretty sure it's a pretty boring game if you're gonna watch that. In the stock market, it's very similar. Your favorite sport team doesn't always win big numbers. Usually it's maybe 5-2 or 6-4, where scores can be very close. And even though your team could be astronomically better than the other team, there's still chances where the opposing team can fight back, they can score a goal, they can counterattack, and this is exactly what's happening in the stock market as well. In the stock market, there are two teams. There are the bulls, which are the buyers, and there are the bears, which are the sellers. If you're unfamiliar with some of these terms that I'm talking about, I highly recommend you to watch another video that I have called Stock Market for Beginners. And from there, you'll learn everything that you need to know as a beginner and give you a basic fundamental of how the stock market works. Let's say there's a great company out there like Amazon, and they're great financials, they're making a lot of money, they're serving a lot of people, they're making great products, and a lot of people are favoring this company. And so what they do is they want to buy the stock. They want to join the bull team. However, there's a lot of people that see the flaws of this company. They're being contrarians, and they're betting that the prices will actually go down instead. And so they're joining the bear team. So for a publicly traded company, there are only so many shares out there that can be traded. So with lots of buyers, there's a very high demand, and the supply of shares is just not there. So that would drive the price up. But that gets to a certain point where the buyers have already bought, and a lot of people who are waiting to buy find the price too expensive to buy at that moment. That's the turning point. A lot of people start taking profit. They've bought low and they're now selling a bit higher. They're taking their money and they're selling their shares out. And thus, as more and more shares become available, the supply of shares are increasing. It will cause the stock price to drop as people are selling their shares at perhaps a lower and lower and lower price, and there's not as many buyers snatching them up. But what makes a company great is that there's still a lot of buyers interested in supporting this company and buying shares of this company. So at a certain point, at a certain price, a lot of buyers will start surging in, buying back in, and thus driving the price back up again. And this is why, if you look at a stock chart, you look at it going up, 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 and then it hits a certain point where people want to sell, and it drives the price down a little bit. And once it gets to a certain point, it continues, the buyers get back in, they want to buy it at a lower price, and then they drive the prices back up to even higher. And thus, that's why no stock price will ever go shooting up to the moon and not taking a break. Because the other team needs to get in, and the other team will challenge that. Also, all companies are subject to market conditions. Companies do not exist in a vacuum, so you have to look at politics, you have to look at world news. Is there a war happening? Is there a resource shortage? And all those can affect how the company operates and how the company makes money. And because of this, the best companies will always have their dips regardless. And this cycles both ways. that a company that's doing poorly will never just go straight down. It'll go down, people buying it back up, and it'll go down, and people buying it back up. How does this help you? Because obviously you want to make money from the stock market. Everybody does. The best way to see if a company is worthwhile of you investing your hard-earned money is for you to build some trend lines. We want to look for charts with an upward trend line because that shows hints that this company is a strong company. And that overall, that in the long term, there's more buyers than sellers of this company's stock. So in the comments below, let me know what you look for in a stock chart. What makes you invest your hard-earned money into a company? And if you're just starting out, don't forget to watch my video about stock trading for beginners. And with that, make sure you hit that like button, make sure you hit that notification button, you subscribe to my channel for future financial videos, and we'll see you next time.